Synovus Trust. Dan, what's your take on these results and how Oracle seems to be weathering or not weathering COVID-19?
Well, Emily, I think in a lot of ways the results aren't too big of a surprise. You know, we think of Oracle, they're a leader in the relational database area, they're a leader in the enterprise resource planning, human capital management. These are all huge enterprise software types of programs that they have, and it's not too big a surprise that they came in a little bit light. One of the statistics I was looking at was their cloud service and license support number. That came in at about $6.85 billion. That was below what I was looking for, which was about $7 billion, and only represented, Emily, about a 1% growth rate. So not too big a surprise, and that is that they, again, are still trying to make that migration as being a pure player, more of a cloud company, like let's say an Adobe, which has made that migration. That's an older line tech company, or let's say like an AWS or Microsoft that's been successful in making that migration. So they still haven't quite got there yet, and I think that's what showed up in these numbers today.
The company, we're listening to the earnings call right now, saying they're working with their clients on resuming deals, but still also having trouble signing up new clients to new deals. How is Oracle performing, as far as you can tell, compared to some of the competitors out there, like Salesforce? I mean, are they in a demonstrably worse position in the pandemic than some of their counterparts?
Well, you're right, Emily. I mean, like we said, they're so enterprise focused. If you think of, for example, you mentioned Salesforce, they have about a third of the software as a service market share in the cloud space. If you look at Oracle, they only have about 6% market share. So I think where the opportunity for Oracle is going forward, Emily, is that they have this huge installation base of people that use their ERP, their database software, that they can then convert over into cloud. And they've only really converted about a third of them. So I think that's where they have an in, where they already have the clients. They've just got to be able to sell them on the idea of using their clients or their cloud suite, opposed to, let's say using, let's say, Salesforce. And I think that's where the real challenge and opportunity comes in for Oracle going forward.
Meantime, continuing to listen to this call, Oracle saying a number of customers actually delayed payments, but they're expecting to recoup all of those delayed payments, and they're looking to achieve, quote unquote, record margin next year. We're going to continue to follow these headlines as they roll in on the back of these results. Meantime, I also want to ask you more broadly about some of these other stories developing. We know that the federal government has been looking closely at big tech, and now we're seeing some progress in the House antitrust investigations into Facebook and Google. Facebook CEO Mark Zuckerberg, Alphabet CEO Sundar Pichai, both companies have said those executives are willing to testify if necessary. Amazon CEO Jeff Bezos, we also know he is willing to testify as well. How big a risk do you think these federal probes are into these various companies?
Well, Emily, I don't foresee any sort of legislation that's going to come out, let's say in the next year or two, that's going to, let's say, break up Amazon or break up Apple or something like that. We hear a lot about that. And I hark back to the late 90s when there was talk about breaking up Microsoft. I will say this, though, Emily, and that is that if we look at some of these charge-offs that have occurred more recently, for example, we know that Facebook did a huge charge-off about, 3 or 4 quarters ago, where they just kind of amortized a big payment for, settling some of these disputes. We know that Google has also made payments in the past. So I think what it looks to me is more of like something down the road where these companies are going to be forced to kind of write a check and take a loss on a quarter to kind of meet the demand of legislators in regards to a violation that they may have. But I don't see across the board breakup of, let's say, Google.
Meantime, let's talk a little bit more about Apple. We don't know yet about Tim Cook's willingness to testify in these U.S. congressional investigations. We do know that the EU has opened 2 antitrust probes into Apple. However, we do have a statement from Apple, these probes into the App Store and Apple Pay. Statement from Apple today saying it's disappointing that the European Commission is advancing baseless complaints from a handful of companies who simply want a free ride and don't want to play by the same rules as everyone else. We don't think that's right. We want to maintain a level playing field where anyone with determination and a great idea can succeed. I mean, some pretty large companies like Spotify have complained to the EU about Apple's practices. What's your take on how big a risk this could be? I mean, if found guilty, Apple could face a fine of up to 10% of its annual revenue.
Well, Emily, that's interesting because it really focuses on their service side of their business, which grew about 17% last quarter. We know that the services side, the Apple Pay and everything they do in terms of their apps and so forth, that's a big component going forward of their overall growth. I mean, we know that iPhone revenue, for example, last quarter was down 7%. So that's a big part of their growth recipe going forward. And it's a big part of offsetting some of the slowness that we're expecting in these upcoming quarters, because a lot of people aren't looking till probably the holiday quarter or maybe into Christmas that we'd get the 5G, which would be the next ramp up in terms of people upgrading their phones. So this is something obviously we're going to have to follow if they end up having to, write off or change what they're doing in terms of this area, which is obviously a huge growth area, which is their service segment.
Meantime, last quick question about Facebook. Obviously, Facebook has been facing a storm of controversy about how they moderate content on their platform, not labeling or fact-checking a fairly incendiary tweet by President Trump. Do you see this as an actual risk to the long-term business, given that it is such an ad-driven business?
All right, Emily, and if you think about the last quarter, Facebook came out and said we're going to spend $52 to $56 billion in security, in artificial intelligence, amongst other things, to try to clean this up. And it seems like it still has been somewhat of a challenge for them. It's obviously something they're working on. You can imagine how difficult it would be on all the platforms that Facebook has to fact check or make sure the information isn't false and so forth on everything that's being said. So it's almost a huge endeavor. They keep putting a lot of money into it. It obviously drains their bottom line in terms of their EBITDA and their EPS compared to their top line growth. So it is something that we have to follow. Emily, just for example, if you think of Facebook this year, they're actually supposed to grow revenues, but their earnings and profits are actually going to be negative in terms of growth, just because I believe of these expenses associated with kind of cleaning up their platforms.